If you see me recording a video on a Sunday, today's Sunday, February 1st, and 73 degrees outside and sunny in Las Vegas, you know there's some drama going on out there in the market for me to be recording you a Sunday video. And oh, do we have some things to get into in this video here today, okay? Obviously, silver absolutely has collapsed now at this point in time in regards to recent price action, down 28%. Bitcoin, Ethereum are now tanking heavy, right? Bitcoin's down to 77,000. Ethereum's down to 2,300. If we pull up these just since mid-January, Bitcoin's now down about 21%, and Ethereum is down about 31% just since mid-January, ladies and gentlemen, okay? We're going to talk about if this is going to have ramifications for the stock market with these assets absolutely collapsing and what this means for certain stocks, what this means for the market in general, all that good stuff. We're going to get into that at the top of this video here today. SoFi Technologies, they reported earnings. We'll get into SoFi. I know a lot of people want to know my opinion, perspective on those earnings. What do I think is going to happen with the stock? What do I think about the price action on Friday? All that good stuff, okay? AMD earnings are coming out in less than 48 hours from now. I'm going to tell you about my expectations for AMD here. Do I think they're going to beat? Do I think they're going to miss? What do I think is going to happen with the stock? All that good stuff. We'll get into that in this video here today, okay? Then I want to react to this one. Tom Lee explains gold and silver, the sell-off, and hear from him and his perspectives here, along with the Professor Jeremy Siegel. Looking forward to reacting to that one here today, okay? Hey, all I'm asking for you guys is one thing, okay? I'm recording you a Sunday video. This never happens. I just need a little thumbs up. If you could just make that thumbs up button glow, I appreciate you in the biggest way, okay? Additionally, pin comment down there. If you're looking to apply to our Prep Stock Group, get exclusive weekly videos, access to all my course curriculums, Prep Discord chat, 1000xstocks.com, all that good stuff. That would be pinned comment. Additionally, if you haven't got to check out these two videos on the main channel, check them out. 115,000 people have gotten to watch this one so far. I just bought a new stock, $60,000 spent. And in this one, age 36, net worth $40 million. Every single investment I own, 95,000 people have gotten to see this so far. It came out 5 days ago. That goes in every single stock, real estate, property, alternative asset, everything I own, okay? Bitcoin, Ethereum are collapsing. Silver's collapsed. Listen, what does this mean for the stock market? Okay. Is this going to tank the stock market? The answer is no. Does this have ramifications for certain stocks in the stock market? Yes. Okay. Listen. Because Bitcoin's tanking, because Ethereum's tanking, because silver just collapsed 28% and had the second biggest drop in its history, and that's a long history with silver, second largest drop ever, right? Just because that happened doesn't mean suddenly now the S&P 500 has to collapse 20, 30, 40%. That's not the way this works. But you got to understand, this can have ramifications for certain stocks in the stock market. So think about it. If you're a fund and let's say you're leveraged, and a lot of it comes down to leverage, okay? So let's say you're leveraged Bitcoin or you're leveraged Ethereum, right? From what I just heard, I believe Tom Lee and his situation there, I think they're down close to $6 billion on Ethereum. It was being reported here recently, which is just a staggering number, right? If let's say you're leveraged on either Bitcoin, Ethereum, or maybe in the silver market or something like that, because it's been the hot play, right? You could suddenly be facing margin calls. You suddenly might have to come up with liquidity, right? And so what can happen is you might be also leveraged to something like a Tesla stock, a high beta name like that has had momentum, right? You might be leveraged to something like Palantir, even something like an AMD, like we're going to speak about here today, right? Those high beta names, those high momentum names that make very dramatic moves, right? And so you might have to then get liquidity out of, some of those stocks. So you sell those stocks so then you can cover leverage that, let's say, maybe is in Bitcoin or in Ethereum or silver or something like that, right? And so, it can have some ramifications in the stock market, but not from the perspective of, because these things are collapsing, it's going to collapse the whole stock market, right? It doesn't really work like that. But it can absolutely have ramifications for certain stocks in the market. And that's what's very important to, keep in mind here, okay? And so now as far as the bottom for these sorts of assets like Bitcoin, like Ethereum, the bottom is anybody's best guess. I've seen there's this supposed to be Bitcoin cycle predictor thing, okay? That's supposed to be accurate. We'll see if it's accurate. Don't put too much faith into this, okay? But based upon that predictor, okay, Bitcoin supposedly is not going to bottom until the fourth quarter of this year. So we're talking like 9 months from now. We're talking having a baby here, okay? And guess where the bottom is? Around 30,000. So don't think like, oh, for sure Bitcoin's going down to 30,000 and it's not going to bottom until 4. Like that might not happen. But all I'm saying is this supposed Bitcoin cycle predictor is saying the fourth quarter and 30,000. If that's even close to being accurate, there's a massive amount of downside still ahead, okay, in regards to Bitcoin and Ethereum here. And we're not even remotely close to the bottom in regards to time or in regards to price. So don't bank on it, just something to kind of keep in mind here. Another thing I want you to keep in mind is silver. Yeah, second biggest crash we've ever seen in the history of silver. But let's not forget, okay, silver in the past month is still up 10%, even after the second largest crash in history. On a 3-month, silver's still up 71%. Oh, you'll be flipping my flapjacks. And on a 6-month, silver, even after the second largest crash in history, is up 121%. Oh my gosh, okay. Some food for thought in regards to that. SoFi, what are my opinions on the earnings? What's my perspective on where the stock goes from here and all that good stuff? Okay, listen. I posted this inside the income statements tab inside the private group. I've just been grading income statements left and right, and I got so many to grade next week because there's so many earnings coming. It's going to be ridiculous, okay? Once again, if you want to apply to our own private stock group, that is the pinned comment down there, and to see me grade income statements is right here in this particular tab, okay? So, SoFi, as far as their earnings, this is an A+ grade. Phenomenal numbers out of SoFi. Bravo, Anthony Noto and the team. Total interest income, TII, 927 mil from 743. If we look at total interest expense, only went to 310 mil from 273. That's not bad. So NII, which many people look at as the most important metric to look at for something in the banking space, right? Which SoFi is kind of that middleman between kind of being a bank and being a fintech, right? NII, $617 million from 470. Oh, that's insane. That's absolutely insane, right? Total net revenue for the company, over $1 billion from 743. Now, look here, okay? This is very important because it looks like, oh, SoFi's profitability went down. That's not good. Their revenue went up so much. Their net interest income, like, shouldn't their profitability went up a bunch? Yes, but keep in mind why it didn't. Look at net income, 173 mil from 332 in the same quarter last year. But this line item, this is why it pays to do more in-depth research and just look at baseline numbers, right? Because you think, oh, wow, they're bringing a bunch more money, but they're not making nearly as much. It's not really accurate. There's a one-off here. So if you look at income tax expense or benefit, right, they had basically a $272 million benefit in this same quarter last year versus $11 million expense in this quarter we just reported, okay? Which, do the math on that, that's a $283 million swing, ladies and gentlemen, okay? So the reality is if you take away that one-off, right, which you could do something like that in non-GAAP, the net income dramatically higher, obviously, and the earnings per share year over year is dramatically higher, right? So this is where it pays to really look into this stuff and, what's a one-off and versus not a one-off, because, like I said, you just look at the baseline numbers, you would think like something's wrong with SoFi, like, oh, they're making so much more money, but they're really not. Dig a little deeper, and then you find out, oh, crap, like it's just basically a one-off weird situation here, right? And so overall, the numbers out of SoFi honestly couldn't be better. Like, this is amazing. Absolutely amazing what the company's doing, what Anthony Noto's doing. I'm a very proud shareholder of this stock. I own this stock in the Patreon portfolio. If I recall, I own it in the Patreon portfolio. I own it in the public account, certainly. I own it in some private portfolios. I'm also a SoFi customer now. I've been enjoying the platform as well, and especially in regards to some of their high yield, like savings and those sorts of things. So honestly, SoFi, a banger of an earnings. And if you're a SoFi shareholder, you should feel very good about things, right? Now, what do I think about the price action of SoFi stock on Friday? It doesn't surprise me, not because of, obviously the earnings were amazing, so you would think like, oh, the stock should be up. Did you see what kind of day it was on Friday? Like a lot of the risk on assets, like AMD sold off 6%. And SoFi gets put in that kind of higher beta names. And when you're in a period of major volatility and things like Bitcoin, Ethereum, silver, that's going to bleed into the stocks I just spoke of, which is something like a SoFi, a high beta name, right, that can make these big, huge moves. And so the price action doesn't surprise me. It should have been up 10 or 15% after those earnings. But Like, you can't control whether a stock goes up or down in the short term. Like, that don't play that game. You can't control it. Don't get frustrated by it. Also, another thing I want to caution people on in regards to SoFi. Anthony Noto's trying to keep the business as asset light as possible, but with that being said, he doesn't always do it, right? SoFi comes with risk. And, something kind of bothered me. Somebody actually in my private group is talking about, they're a huge SoFi shareholder, and this is how generational wealth was built, right? Listen. That's not the only way generational wealth is built. Can you go super heavy in on a stock that's a game changer and make that's a possibility. But you don't have to risk the farm to make generational wealth. How you can make generational wealth is have time on your side, have more income than expenses, and make great investments. Not everything needs to be a home run, a grand slam. If you hit plenty of doubles and singles, doubles, and triples, you're going to go a long way in this game, okay? And you will build generational wealth. Where some people get in the problem is they try to swing for the grand slam all the time, right? And go all in a stock that they think is a generational opportunity. SoFi could go bankrupt. You do realize that, right? Like, it is kind of a banking related play, even though they're fintech as well. They can go bankrupt. You never know. Like, all of a sudden the economy turns south, and all of a sudden there's some major leveraged problem at SoFi, and next thing you know, like, they could go bankrupt. Or they could get sold for, $6 a share or something like that, like a crazy price like that. That happens in the banking space, right? And once again, Anthony Noto's trying to keep the business as asset light as he can, but that doesn't mean you're always going to be able to do it. Sometimes you're going to take on loan risk. And so, like, don't ever think with a stock like a SoFi, don't ever think like that's, I got to go all into stock or something. Never think about that with any stock. And especially anything in the fintech or banking world, like, they come with big risk. They absolutely come with big risk. And so build generational wealth by having more income than expenses, invest in that wisely into great companies, building a great overall portfolio. And, over 10, 20 years, you'd be shocked at what you can achieve. Versus, trying to swing for a grand slam all the time. It's like, dude, like, might be a grand slam opportunity, might not. And if you're wrong, oh gosh, you're going to set yourself years back. And the one thing you can't afford to do in this game, if you really want to build generational wealth, you can't set yourself years and years behind. You set yourself 5 years back, 7 years back, 10 years back because you were leveraged a position or you went all in or something like that. Oh my gosh, it could be absolutely devastating to, where you're trying to climb if your goal is to actually create generational wealth and get to a $3, $5, $7, $10 million portfolio. Like, oh gosh, right? So, okay, so that covers that. AMD. Okay, am I expecting AMD to beat, miss earnings? Am I expecting the stock price to go beast? All that good stuff, okay? Listen. It's very important you understand history regarding AMD, okay? And when I say history, I'm not talking about 20-year ago history. I'm talking about the last few years, okay? This shows you the earnings history of AMD. What do we notice? They almost never miss numbers, okay? The only quarter they missed was like this quarter back in 2022. They missed EPS by 3 cents and they missed revenue by $83 million. Okay. So first off, if you're expecting a miss on either line item, extremely low probability. The chances are they're going to beat their earnings per share. They're going to beat their revenue. Now, is there one you could be more confident in? Absolutely. The one you could be much more confident in is revenue beat, right? Like, look at the revenue beats. There's some quarters where AMD will not beat the earnings per share. Now, I think it's pretty probable for this quarter and future quarters that they're going to beat not only revenue, but they're also going to beat earnings per share as well. Here's why. They're going into a high margin chip cycle now at this point in time. It really started kind of with the 355, but the 450 is going to be blow off the top. That really goes into major production this summer, right? And so that's going to be likely some of the highest margin chips AMD's ever sold, right? And so I'm expecting margins to be better than folks expect really over the next couple years, right? Earnings per share to be better than people expect over the next couple of years, and revenue to be better than people expect over the next couple of years as well, right? So we should kind of get a, an overall, let's call it very kind of positive momentum going for quite some time here. If we look at what analysts are expecting for this quarter, 132 is their estimate for EPS, which is 21% growth. I think that's a little low. I definitely think that's a little low. I think I would expect closer to a 30% number. And as far as revenue growth goes, 26% in this quarter, only 25% next quarter. I think both those numbers are low as well, right? But the quarters I really think is way too low. Is like, look at the June and September quarters, 31%, 26%. You gotta understand, like, we're gonna be likely into some sort of production, if not major production, for 450 series by here. And I just think analysts are way too low. So now, with that being said, what do I think is going to happen with the stock price of AMD? Well, first off, the stock price could go down Monday, right? It's no guarantee, but it's very possible. Like, if you continue to have money sucked out of Bitcoin, Ethereum, the silver collapse and gold collapse continues, you could see more sell-off on Monday, right? Maybe even into Tuesday. Like, we'll see, but a lot of that's going to depend upon, is there even more damage in the commodities market? Leverage has to come out, those sorts of things, right? But I think after the earnings, let's call it Wednesday and after, unless, of course, the market's tanking or something, I think, if anything, the stock's going to go up pretty significantly. The fact that it's selling off before earnings, I think, is actually a good thing rather than a bad thing. So that's my opinion on that. With that being said, am I going to play call options or something like that on AMD? Absolutely not. No. Who knows? The stock could go down to 200. You never know. I don't need to stress myself out with trying to, think if I'm going to be right on AMD. Like, I'm going to place call options because, if the stock goes down Monday, Tuesday, it might go up because they're going to beat earnings. Like, who knows? Like, Wall Street's crazy. Like, they could sell the stock off more, right? And go down $200. And you're stuck with all these call options that expire worthless the next week, right? Like, we don't need to play that game. Big investor in AMD. I have over $1 million in that stock. If it goes down the short term, it goes down the short term. If it pops big on earnings, like I think it probably will, but it might not. But it probably will. Great, I'll make a bunch of money. I don't need to stress myself out with call options, and the stock needs to be a certain price by a certain date. And oh my gosh, no. I don't need to do that silly foolishness of gambling, right? Like, you want to make it to the big boy leagues, you got to make big boy moves, and you don't make big boy moves by gambling on call options, okay? Okay, let's get into Tom Lee.
Have you, Professor, I'll start with you. You call this an excellent choice of Mr. Warsh, your first pick. Why?
He's the most experienced. I think he did a great job during the financial crisis. He's gotten, as you know, praise across the board from central bankers, not only those on Wall Street. Certainly he likes a lot of Trump's policy, but he's not going to be a lackey. He's not going to be a toady. I mean, look at the dollar jumped. I think it was a lot of international concern. Trump was going to put someone in and just going to lower interest rates. Well, that's not happening. I think he picked the most responsible, qualified man here. And I think that's a very positive for Wall Street and the dollar.
Wow, interesting commentary there, Professor Tom Lee. You agree with that? And what do you make of the very trades that I highlighted at the very top of this show? Because it's so dramatic. Silver's rollover today, as was the run-up that we've seen.
Yeah, I think it is a good choice for Fed share. And the move in gold and silver today, it's an interruption. So clearly the market is rethinking the implications of a new Fed share. I think the timing was a surprise because it all kind of came out last night. And I think it's very healthy, actually, for silver and gold to be seeing some profit taking, because that was a juggernaut trade that I think in many ways was like a vortex sucking risk appetite from everything else into those two trades.
You think those two trades are done?
By the way, what's interesting about that gold and silver move is people are like, the silver shorts are making so much money now. Dude, the silver shorts have been getting obliterated. Like, they kept having to try to go in and short silver. Like, look at the 6-month move. It's up 121%, right? So you go in, you're like, the silver move's way overdone. You short it, right? And it goes up more, right? And then you try to hope it goes down. It goes up more, you short it. And you're like, crap, it's going up more. I got to cover that. And then you try to re-go. Like, dude, you could have tried to enter this silver short 5, 6, 7 times over the past 6 months, if not 10 times, right? And, okay, you finally won. Dude, you know how many times you got called out on this? Like, you probably got liquidated. Your whole portfolio's probably gone by the time you even got the chance to finally make some money on this silver short. So, no, the silver shorts have not done well. They have not done well. they've gotten obliterated. Maybe there's some guy out there who got super lucky and, went in when it was 100 plus and, has cashed out a big profit. But dude, I can tell you, most people that have been short on silver, like the past 6 months, has gotten absolutely wrecked and probably lost their entire portfolios.
I mean, you talk almost as if you think this is merely a pause that might refresh. The velocity of the move out of silver today is somewhat startling to look at. The market's not supposed to act that way.
Yeah.
I don't care what happened back in 1980 or whatever. It's not supposed to do this.
That's right. I think there is some fundamental reasons for silver to be rising, and gold is, of course, now should hold a place in someone's portfolio. But those were parabolic moves. I think you're right that could look like blow-off tops similar to 79.80. We won't know with the fullness of time.
Okay. Professor, what do you make of those trades?
100% disagree. In regards to Scott's opinion, like the market's not supposed to do this. Yes, that's what the stock market does, Scott. You know this. It does stupid things. In the financial markets in general, like silver goes up, 150 something percent and then drops, 28%. Like, dude, that's just what the financial markets do. Like, stocks are crazy. Like, should Palantir run to 200 plus? As a Palantir shareholder, no. I don't believe it should have. Should Tesla right now be 450 or whatever price it is, 430? No, absolutely not. But stocks do crazy things. Absolutely ridiculous. Should Meta went down to $88 in 2022? Absolutely not. Should Palantir went down to $6 in 2022? Absolutely not. But it happens. The financial markets can be extremely irrational on the upside and the downside moves. Stocks in different financial assets in general will go way higher than they should have. And they'll go down way more than they should have. Like, that's just the financial markets for you.
Often talks so heavily about stocks, and we will, but these are the moves that have grabbed everyone's attention. Gold, silver, dollar, probably find a few other things too.
When I agree with Tom. When you have so many momentum players that join gold and silver, just playing that trend, this is exactly the type of reaction you get, that parabolic move down and then any little piece of news, a little selling, and maybe just the confidence, hey, Warsha's not going to debase the currency. That's enough to trigger this sort of reaction. This could be the high for quite a while, but I still think that, I agree that, having a sliver of gold or some gold in your portfolio is probably still a good idea. I mean, it is a good counter-cyclical asset. It does diversify against risk assets.
Okay. So, Tom, your call on the market has consistently been that
if I had to say, like, let's say my mom was an investor, which she certainly isn't, but let's hypothetically say my mom came to me and she's like, Jeremy, should I buy gold or should I buy silver? Silver. All day, every day, baby. Silver. 100%. Silver just has so many real world use cases, and with technology and the way technology is developing, it seems like silver just has way more applications for it than something like gold, right? Obviously, we know gold for jewelry, but silver is also big in jewelry, but that's no. So I definitely would prefer silver over gold.
I think we're going to have what you describe as a three-phase market. You have...
But that opinion has not changed in years. That's the way I've been for years. Like, years ago, I bought a bunch of silver. I could have bought gold, but I preferred silver. And silver's been a much better asset over the past few years. Much better.
To the year, and in all respects, we've seen that. We've hit record highs this week again on the S&P. You're going to get a drawdown. You've even used the words bear market. And then we're going to get a nice ramp into year end that you think can get us to 7,700 by the end of the year on the S&P. Explain.
Well, it has been a good start. And as you know, many people kind of follow what markets do in January because that sets the tone for the year. And we're on a positive start. Plus, the first week was positive. It's a good omen. So I actually think our 7,700 is probably low. I think the S&P could maybe even do 8,000. We're not sure. But we also know that there's a few things that need to be digested. 3 years of good gains. A lot of good news is priced in. There could be a policy shock. There's been a lot more, and maybe part of it is the White House picking winners and losers in front of the midterms. And the third is that we have a new Fed that the market is going to test. And I mean, today's a taste of it, right? That we have an announcement of it, and the market's already picking winners and losers among commodities or assets or dollar. So I think those can contribute to a drawdown. Last year, it was a policy shock that took us down 20%.
Professor, how does that summation from student Lee sound?
Yeah. Tom is gutsier than I am in making short-term predictions. He has actually a fairly good record. I would like his opinion. I mean, we do see rotation. I mean, the AI phenomenon is magical. Might this be the first year in 3 years where we see the other 493 stocks outperform or not? I'm calling. I wouldn't be surprised if the S&P only did 5 to 10% this year, but the non-Meg 7, the rest did 10 to 15 or even more. It's really hard to say when that might come, and AI is still booming, but I think. I would like to know his opinion. Is there more competition, more doubts about adoption, more fear that there could be a technological breakthrough that might penetrate some of the moats of these great stocks?
Do you want to answer that? Because you're pretty bullish, these names.
Yeah. Well, one, all of them are linked to the importance of AI, and as the tentacles in AI grows, they all benefit. I think a lot of the progress in AI is invisible at the moment. That's why markets are kind of questioning things like what Microsoft reported. But I think that those invisible gains then lead to productivity. But it's at the same breath, this year, I think the market is broadening because we've seen a lot of other trades work besides the Mag 7. And it's not a bad thing. I mean, that to me is not late cycle. A broadening of the market is as a mid-cycle phenomenon, right? Because basic materials are doing well, small caps are doing well, a lot of industrials and healthcare. So that's a sign of a broader market, which is the other 493.
It's a sign, I guess, Professor, of what some...
Yeah, the market's... I think the market's very confused. Market doesn't know what's going on regarding AI specifically, okay? And here's how you can tell. Stocks like NVIDIA, stocks like AMD, right? Let's say you're super huge, like ultra bull on AI, and this is all game changing, and we're changing the world forever. We're changing humans forever because AI is going to be so big and the super intelligence and all this stuff. Okay, so you're like totally on that wavelength, and like this is going to be fundamentally disrupt countless business models and countless economies around the world, and like this is the biggest thing to ever happen in human history. Okay, NVIDIA and AMD should be dramatically higher than where they're at right now, if you truly believe that. Okay, dramatically higher, because those are the two hardware companies at the front of this revolution, right? And they're not. Like NVIDIA should be $300-400 stock right now. AMD should be a $300 or $400 stock right now, if you truly believe that. Okay, I'm not talking 5 years. I'm talking right now. Those stocks should be that. They're not. So the market's still not even necessarily convinced in a super huge way that this is an absolute game changer, right? NVIDIA is trading at a forward P right now of like 20 something, if I recall. 20 something for NVIDIA, and you believe this is like changing the world forever, and it's at a forward P in the 20s? What? That doesn't make any sense. Come on. So there's that. Okay. But then you look at all the software stocks selling off huge because AI is supposed to be this huge disruption. I guess it's going to disrupt Salesforce, and I guess it's going to disrupt ServiceNow. It's going to disrupt Adobe and Intuit and all these great companies that have some of the best business models we've ever seen in history. It's going to disrupt them all. Then why is NVIDIA and AMD not dramatically higher than they're at right now, right? So the market doesn't know what's going on. The market is doubting the AI revolution, which is fair. You can doubt the AI revolution if this is actually a game changer for humanity and for economies and for the world forever. Okay, it's doubting that clearly with AMD's and NVIDIA stock prices. They should be dramatically higher than they are, and it's also like thinking it's real and it's going to just totally disrupt all these SaaS plays, and it's like so the market's just confused right now. It doesn't know what to believe. And so that's why you have this phenomenon where AMD and NVIDIA are trading way too low. And you also have a phenomenon where, like they both can't be true. They both can't be true. One's true and one's not, right? Maybe this isn't as crazy of a game changer as we thought. Like maybe AI is cool and it's going to add to productivity some, and it's going to add to, it's going to hurt, help with certain things, right? And cancer diagnosis and things like that. And it's going to help, right? But it's not like, oh, this is fundamentally changing and disrupting the entire global economy and all these companies, right? If that's true, then these SaaS plays should not be selling off the way they should. These stocks should actually be appreciating greatly because they're actually going to make money from AI, right? So the moral of the story is it's doubting both, and it's like you can't doubt both. One's got to be true and one's not. If AI is nothing, then, or it's just a little something, then, dude, the fact that these SaaS plays are selling off is ridiculous, and these stocks will double up or triple up in the next 36 months.
Describe as a run-it-hot economy that is a run-it-hot stock market, and all those cyclical areas are the ones that would do well. Now, normally after we would get a few of the mega cap earnings reports, I would ask you, well, what did we learn about the mega cap stocks this week? But I don't think we learned anything, because I think the group shouldn't be discussed anymore as a group. And we learned whatever we did about Microsoft, and we learned something different about Meta, and thus the stocks reacted differently.
I've never seen, the Mag 7 react so differently. They usually just go together, and we think of them as a group. But continuing on what Tom said, I mean, really only 15 to 20% of firms have really even begun to use the potential of AI. And I mean, those are the ones that I think really have a great opportunity to really raise their profits. And we might see layoffs, et cetera, and so on. But that's part of a cost cutting in a technological boom. And that's why I think in some way they have the potential to outperform the Mag 7 this year. When you start out at 17, 18 times earnings, you don't need much above expectations at all to really have a good move with a profit increase.
Let's talk about earnings real quick before I let you go. We start out with the shrimp cocktail. The bank started out, and then we get the meat potatoes, and we're starting to get the entrees. Like this, the companies.
Before we go into earnings, I want to show this because they were just talking there about like, these stocks usually go together. In all due respect, Professor Jeremy Siegel, in all due respect, sir, that's not accurate. These stocks do not just move together. They really don't. I pulled all the way this up from, where the stock market bottomed in that fourth quarter of 2022, right? Look at how dramatically these stocks are different, right? You have NVIDIA up over 1,000% since that time. Meta's up 543%. So already you got an insane divergence between NVIDIA and Meta, right? Then look at how big the divergence is. It's like a double up divergence here as well. Between the third stock, Google's up 246% since then. Then look at this, how big the divergence is between that and the next stock. Amazon's up 156%. Then you have Tesla up 135%, Apple's up 75%, and Microsoft's done the worst of the bunch, and they're up 73% since then, right? These stocks are not equal. You can put them in the basket just because they're all like $1 trillion plus type market caps, but they are not equal. They are not equal.
Really matter. Estimates are high. We're exceeding them to this point. What's interesting to me is the price action has not necessarily matched the reporting. Reports good, price action not so much, even among those that have done well, Meta excluded.
The numbers played out. If you compare this quarter versus last quarter, companies that are beating are rising a lot less. Basically 0.5% now, 5-day gain versus 2% last quarter. But the ones that missed were falling 5.5% last quarter. They're falling 3%. So the market is almost taking the edge off on earnings results. But I think you did point something out that's true. I think it's the first time ever that Meta and Microsoft had a divergent move. They've almost always moved directly on the same day, and one was down 11%, one was up 11%. Or I'm getting the numbers wrong, but that's like a 3 or 4 standard deviation divergence.
Professor, lastly to you, are you confident that earnings can live up to the hype? Because they really have to. It's where the growth, so to speak, in this market is going to come from. It's not really going to come from multiple expansion anymore. It has to come through earnings. What do you make of that?
Well, it certainly has to come through earnings for the Mag 7, but, I don't, the non-Mag 7 are still selling at 18, 19 forward earnings. And, I think that's extremely reasonable. Certainly, I mean, the outlook, listen, let's hope we got this government shutdown taken care of, a really good Fed pick out of the way. We have one little more speed bump to go. We need to know what SCOTUS says about tariffs. That's going to come, at the end of February. And after that, let AI do its work. I think the skies look clear for a really great year in 2026.
All right. We'll take your forecast for now.
That bothers me. That bothers me, man, when they're talking about, sky's clear, it's going to be a great year. Because, so many Wall Streeters went into this year. That's one thing that gave me pause about 2026. I'm like, gosh, man, everybody's so bullish. It's going to be a great year. That bothers me. I like it more when people are like, I don't know about this year. Like, this year scares me. Like, we got a lot of potential problems this year. Like, I like it when people are cautious. When I hear this, I think it's going to be a great year. I'm like, now I'm doubting it. Now I'm doubting if it's going to be a great year, right? So, anyways, it is what it is, okay? I appreciate y'all for joining me as always. Thanks for being here. Thanks for smashing likes. Thanks for being subscribed to the channel. Additionally, main channel, financial education. If you haven't got to check out these 2 videos, make sure you check them out. I just bought a new stock, $60,000 spent 2 days ago. 115,000 people have gotten to watch it. And then this one, age 36, net worth 40 mil, every single investment I own. 95,000 people have gotten to watch that so far. Pin comment down there today. If you're looking to apply to our private stock group, private wealth group, we'll send you Steel membership cards in the mail to your house once you join us in there, including our new 2026 private group card. I still got this baby in the plastic. And when you join us on a lifetime basis, we'll send you your black card, your lifetime membership card. Appreciate you. Much love as always, and have a great day.